Hello, good evening, everyone. Good to see every one of you here. My name is Alex from MarketWise Asia, and if you guys can hear me loud and clear, please say a hi to me in the comments. I am friendly. I won't bite. Just let me know. Okay, say hi to me so that I know everything is good, everything is well. Today it is as usual, Friday, 28th of January, right? 2022. I hope you guys are having a good weekend. Okay, and yeah, this is, I think today we just chill a few days left before the Chinese New Year. So how are you guys going to, celebrate the New Year? Are you going to, prepare food, going out to eat or whatever, right? Just let me know. Just say hi to me also. Okay, so yes, the market is actually in line with the Chinese New Year, right? Chinese New Year is red. So the market, it is also red right now. Okay, so let me take a look at the comments over here while we wait for more people to stream in. Okay, so Friday, just before the last Facebook Live, just before the Chinese New Year. So let's take it easy. And by the way, I am out the whole day, nearly the whole day. So was away from the desk, actually, I didn't really prepare for this Facebook Live, but okay, don't worry, but I have certain things that I want to talk about, but they might not be coherent now. Okay, so just bear with me. I maybe some of the pointers I will jump here and there, but I try to share with you some my views, some maybe new things and some good stuff lah. Okay, try to share with you. Okay. All right, so let me look at the comments right now. Hello, Han Hock, Bengtek, Jennifer, SF, Florence, Ivan, Faith, Kelly, Patricia, Nicole, ZJ, Edmund, Bernard, Yang Li, Xinhua, Nelson, Christopher, Pauline, Mark, Pei Wen, Mary, David, Gabriel, Eddie, Jolene, Benson. Okay, now Wei Lun. Chinese New Year visitation is allowed in Singapore. Yes, I think we can only have, I think within 5 within a day, right? There's a limitation, okay, but I'm not exactly sure the rules and regulation, okay. But if you don't know the rules, forget it. Just don't visit, okay. Just your few close relative will do. Okay, Wei Lun, hello, CL. Christopher Chong say this week has been bloody for the market. Okay, yes, okay, yes, that's right. Okay, five. Okay, Joshua say 5 visitors daily. So yeah, so there's 5. I think you got it right. 5 visitors. Okay. Anyway, yeah. By the way, right, just a quick show of hand before we really kickstart this session. Just wait for maybe 1 to 2 minutes, right? Of course, by now you guys should know that the market has been bloody red. Okay, at this moment in time, okay, within the next 1 or 2 weeks, are you guys bearish or bullish? Within the next 1 to 2 weeks, are you guys bearish or bullish? If you are bear, just type bear in the comments. If you are bull, just type bull in the comments. I just want to have a sensing also. Once again, for those who just join us, right, if you are bear, just type bear in the comment. If you are bull, just type bull in the comments. Okay, and anyway, I just want to share with you guys also a disclaimer. Whatever I share today, it is just for educational and informational purpose. It is not a recommendation, right, to tell you what to buy or what to sell. Okay, unless it's always wrong, so please don't copy me. My opinion is just my opinion. It doesn't mean that I'm right. Okay, yeah. So yeah, got it, huh? Okay, so and before I also kickstart, I just want to let you know that we market-wise, I think we have this YouTube channel. So do subscribe to our YouTube channel over here. Let me post the link in the comments. I'll see the comments later. So the YouTube channel is over here. Okay, sometimes I will post certain things, right? For example, the most recent one, I said that the market actually touched the yearly central pivot range over here. Okay, so it is over here, a rebound, a relief rebound maybe could be soon. All right, so do I urge you to give me how to say subscribe to our YouTube channel. Okay, so right now we're about 600 plus. Okay, do subscribe. Some of the contents I will not share on Facebook, mostly in the Telegram and YouTube only. Okay, so do subscribe to our Telegram channel, and as usual, do also subscribe to our Telegram channel. So I post the link in the comments. Right now we have about 4,000, nearly 4,005 already. So I'll post the link in the chat also. Okay, so yeah, you should be able to see the link in the scrolling bar as well. Let me see the comments. All right. Uh, bear boo 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 bear boo bear boo bear. Oh, okay. So actually, it is still quite mixed 50-50 lah. Okay. This is a very interesting thing. I expect most of you guys should be still bearish, but there are still quite a number of people bullish. Okay. Yes, I will share with you some of the things that I'm looking at right now. So once again, for those who just joined me, thank you for spending your time with me this evening. Do subscribe to our Telegram and YouTube channel. Okay, my YouTube channel, it is over here. I'll post a link once again in the comments. And also, if you enjoy my content, do give me a like and share on this Facebook Live. And if you're watching this live on YouTube, okay, do also subscribe to the channel as well. All right, so you can take a look at my YouTube video. I say that, there's a relief rebound coming soon. Okay, hit the yearly pivot over here. Okay, you could just watch it over here. So let me see that here. Okay, so I just want to share with you certain things. Okay, correction, market crash. Right, I don't think that the market might crash at least for this moment in time. Okay, we share with you some fear and greed, CNN, the numbers. I'm going to share with you some breadth indicators that I'm also looking at. Okay, if you watch the replay or you watch live, I think on Wednesday, the booster webinar with Jay Toon. Okay, he also shares some breadth indicators as well. If you don't, you can watch the replay. You should see the replay link in your email or subscribe to our Telegram channel, and you'll be able to watch the replay booster webinar. Okay, and also talk some of the very beaten down stocks like the ARKK, right, the ETF, the Cathy Wood ETF over here. Okay, let's go through the some of the stock components and also see what are the price performance and also their certain fundamental ratio, like for example the PS ratio, the price to sales ratio, etc. Okay, so let's take a look at the market right now. So the market, it is actually pre-market was actually pretty red, but right now kind of recovering a bit. For the Nasdaq, it is actually Nasdaq future. It is actually positive a bit. Okay, right now negative a bit. Okay, but generally still okay, not the worst yet. All right, so just to let you know, correction, it is very normal. So just want to share with you what I found from this site called the Visual Capitalist. This site does very good infographic. Okay, and a lot of besides just market, as in market news, data, etc. Right? So they're very good. Other things as well. You can go to check out this site. But just want to share with you this link over here. Right, 7 facts that will free you from the fear of stock market crashes. Okay, I'll share the link in the comments. Okay, so just go and take a look over here. Let me post the link over here. Let me see first. Okay. So at this moment in time, all right, I am still at this moment. I'm still think that it is a market correction. Okay. There are certain facts that I will share with you later. So, okay, so this site over here, I think you guys can see that it's quite big. Okay, and although this site, it is the last published is in 2018, this article, but it is still pretty relevant today. Okay, all right, so let me share with you this thing over here. All right, so this one, very simple, right? If you watch the recent Market Insights Future Summit, right? Actually, Colin also talked about that, also about market correction, interest rate, and such. So correction actually, like what he said, is actually very normal. On average, right, corrections happens once per year. This is data. It is since 1900. Okay, so average, a steep correction once per year. Okay, the average correction looks something like this. Okay, it is about 54 days long. So that it is about 3 months. Okay, 2 or 3 months or something like that. Okay, could be 1 month, 2 months, 3 months, but a based on their data, it is about 54 days long, 2 months plus, okay, 2 months, okay. And the average decline is actually about 13.5%. And the uncertainty of a correction, right, can make people to make big mistakes, but in reality, most corrections are over before you know it. Okay, this is not that important. Okay, this is more important, right? Fewer than 20% of all correction turn into a bear market. So again, I want to emphasize that since the I think since after the 2008, right, the GFC, right, the Great Financial Crisis, right, there are gurus, mentioning that the next financial crisis is going to come out even bigger, bigger and bigger. It's a crash. Since 2011, 10 years ago, 11 years ago, right? People are saying that the market crash will come, the market crash will come. Now we are already 2022, right? It is still on a bull. It is still a bull market right now. It still haven't crashed yet. But again, I'm not saying that the market won't crash, but most of the time, bull market lasts longer than the bear market. So for a bull market, right, as in for a stock market, most of the time it's a bull, okay? So don't try to always predict that the market going to crash, the market's going to crash. At one time it is, but it is quite fertile that, you keep shorting and think the market will crash, but you miss out all the great run, right? Okay. Yeah. Number three, right? Nobody can predict consistently whether the market will rise or fall. Okay, but there are some indicators, like for example, the breadth market, whether there's divergence and such. It can give you some clues, but most of the time, like we don't know lah. Okay, I also don't know. Okay, I can only anticipate. Try to give some clues. Like for example, recently I talked about the VIX over VIX, etc. lah. Okay, some of these I think the market could fall, but it doesn't mean that it will. So nobody can predict. I also cannot predict. Okay, but this is only God. Only God can predict. So anyway, yeah, three. Number four, the market has always risen, right, despite some short-term setback. Okay, so I think you all know, all right, historical bear market have happened every 3 to 5 years. I think this is not really relevant now because I think since 2008, I think 2018, okay, there is a big correction. I cannot really write, I don't know what happened, okay. 2018, okay, there's a big correction. I think that more than 20%. If you define that as a market crash, or the COVID crashes in 2020, to me, not really a market crash. To me, it is still a correction. A market crash is something like the 2008 financial crisis. But yeah, for me, of course, it is quite subjective. Some people think that the COVID, it is a crash, okay, and the market resets everything. But for me personally, I think that it is still a market correction. Okay, yeah. And bear market become bull market and such lah. Okay, and the greatest danger is being out of the market. So all this, I think but I think the takeaway, all right, is the number one. Okay, more important thing, right? On average, correction happens once per year. All right, so let's take a look at this data over here. Okay, let me see over here. Okay, you guys can see this chart or not? Okay, let me see. Yardeni. Okay, by the way, all right, I found this very interesting site over here called Yardeni. Let me try to see this. Okay, right. So share with you something new again. So this site called Yardeni, and they have a lot of research report over here. Okay, you go to this site. Again, it is free, but I think it's really, really very good. Okay. All right. So a lot of data. Follow me over here. I do I need to zoom in? Zoom in. All right. So can take a look at the financial market. Let me see. Not the important thing one. Let me see. Let me see. There are a lot of things. Okay. All right. A lot of reports. Like the breadth indicators, price above moving averages, and such. Okay, there are a lot of data over here, free data, and what stock market cycle, January barometer over here. Okay, and go and read about that. If the market it is up in January, down. If the market is up in January, okay, but the overall year is down, happens how many times? If the market is up January, but it's also up how many times? That's such. So there, okay, I won't go through everything now. So basically, you can walk through this side over here and see all the data over here. Okay, very interesting site. Okay, I just discovered recently only. Okay. Post the link once again in the comments. I think this will be the main takeaway for today's session. Go and explore this side over here. But the main one I want to share with you is the, where is it? Let me see the link over here. Okay, it's this one. All right, you guys can see, right? So, all right, so the bull and bear market. So basically it is down, list down all the correction from 2008 to 2021 this year, and the latest data it is I think last, is it when was that? Let me see the date. It is on the 27th. Okay, it's yesterday only, 27 only. All right, I try to zoom in, just follow my cursor because I cannot write here. Just follow my cursor over here. Of course, no, this is the COVID sell-off, right? Minus 33% over here. And the rest, they classify as, correction as decline of more than 10%, but less than 20%. Minor ones, 5 to 10% are all in blue shade. Okay, all the one that in blue shade one, minus 5%, minus 10%, minus 6%, minus 19.8%, minus 10%, blah, blah. So you can see that correction part and parcel of the bull market cycle, right? And very few times we will see a correction of more than 20% if you classify that as a market crash. Okay, whatever the definition is, okay, more than 20%, it is actually not common. So of course the COVID crash and 2008, I think about 20% plus thereabout or minus, depending on which data you get. All right. Subsequently, you have to go back to 2011 already, all right, for the past 11 years. That is during the Euro debt crisis, right? But interesting thing is that you try to see the numbers over here, okay? For it to fall 16%, it took about 70 days, 19%, 157 days, 9.8%, 28 days. You see 60 days, 34 days, 96 days. So thereabout, right, you go and add up for the past 11 to 12 years, right? The average should be about, from just, I didn't really calculate that, but at a glance, should be about maybe 40 days, 40 to 50 days, that kind of numbers. Of course, the COVID one, minus 33%, it is actually very fast. Within 1 month, it fell 33% already. Okay, so I hope you guys will find this site useful. All right, yardeni.com. Once again, for those who just joined us right now, we have about 300 people in this Facebook Live right now. Okay, I'll post it in the comments. Okay, if this is something new to you, if you have never come across this site, all right, type new in the comments. Okay, while I take a sip of water first. And for those who just joined us, do give me a like and share in the comments. Okay, so there are really a lot of things in this side. So let me see what else. Stocks over here. Let me see. Performance years to date, global stock market, etc. All right, you can see over here a lot. You can go and just read through. Okay, you don't have to know everything, but just find those that you think are interesting to you. Okay, so do give me a like and share on this Facebook Live, but also to tell Facebook algo that you enjoy my content. All right, if you don't give me a like, right, or engage with me, Facebook will think that you don't enjoy my content, and you will start to see lesser and lesser of our Facebook feed. Okay, on your feed. Okay, so do give me a like and share. Okay, let me see over here. So talking about the market correction, this is the data report at yardeni.com. All right. So based on my personal view, let's assume that my view is correct. It is still in a correction. So I think, right, the correction will last about 2 to 3 months. So right now, we are not even, as in we are nearing to the 1 month mark, right? So maybe there could be another 2 or 3 months time. There'll be pullback down. So I'll give you my reason why, okay? So it's based on previous experience and also history based on the previous history. So let's take a look at the S&P 500 right now. All right, so let me remove this line over here. Let's zoom in, really zoom into the monthly time frame. Okay, monthly time frame over here. Of course, you guys can see the chart, right? You can see that the market actually, the very big red candle bar over here. By the way, this is a monthly chart. So each candle represents 1 month. So this is January, then this is last year December and such. Okay, November. Okay, all right, you take a look at the previous market crashes or correction over here. Okay, so this is a small one. Okay, in over here, this take about 2 months. All right. And of course, the COVID crash over here. All right. So this is about, if you count this as the peak, right? 1 month, 2 months, 3 months. Here could be a bit wobbly. So 4 months also. So let's treat it to 3 months, like 1, 2, 3, 3 months also, right? And over here, this is towards the 2018 December over here. Can you see over here? This one, 1 month, 2 months, 3 months. Also about 3 months, right? A small one over here, 1 month, 2 months, 3 months also over here. Can see? All right, so this is start of 2018, more of a shallow pullback. This pullback was just about 10%. All right, the 2018, the late December there, the pullback was the peak to the bottom is at about 20%. All right, of course, 2015, this 2015, right, it is actually a kind of a ranging market, very difficult year to trade, okay, ranging market. But you can see that, from the peak to the bottom, right, so also take about 3 months, 3 to 4 months, all right. 1 month, here, the peak is actually here, okay, all right. 1 month, 2 months, 3 months, 4 months. So they're about 3 to 4 months, okay. And subsequently, then in 2011, the Euro debt crisis, more severe one, all right. 1 month, 2 months, 3 months, 4 months also. So they're about. So let's say if history is to repeat itself, all right. Right now, we are just the start of the first month. So price could do something like this, 1 month, 2 months, 3 months, or maybe like that, like this, right? So 3 to 4 months. So just to engage with me, let's say, for example, if the market continues to have a correction, you take how many months? Okay, you take how many months for market correction to be over? Please type in the comments, right? Do engage with me, okay? Let me know, okay? How many months from what I shared? You get what I'm trying to say? No? If you get what I'm trying to say, type yes in the comments also. Type yes in the comments also. Okay. Jasmine said, seems like always start in January. Okay, based on seasonality, right? January, it is about 50-50. Okay, so if you take a look at the stock chart seasonality over here, you can just put in SPY. 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 Okay, S&P 500. You take a look at the seasonality over here, SPY. Can you see that? Zoom out. Okay. For the past 20 years, okay, let's do 20 years. 20 years. All right, can you see about 45% or 50% thereabout lah? It'll be positive or negative. So 50% will be positive lah. So another 50% is negative lah. Of course, like I think somebody said, right? April, that will be the bullish month, right? Yes, April, 80% of the time it is actually positive bullish. Okay. So again, yes, I can see a lot of comments about 3 to 4 months, 2 to 3 months, that kind of. So personally, I don't expect it to end so soon right now. And you need to remember, if there are correction, let me remove these comments over here. Okay. So let's say if there are correction, the correction, right, doesn't move down just like that in a straight line, like this, that just pump all the way like that. It doesn't work that way. Like, along the way, price will do a pullback. Okay, so right now it's like this, right? It could be like, like this, come out like that, or like that, come down. Or it could be like this, come down, then ping pong, ping pong, ping pong for a while, or come down again. Or it can be, like this, very rare price can do like this. Most of the time, it should have some pullback or a retracement, whatever you call it, okay? Or like this, come back down, test again, okay, test again the low over here. Maybe never go a new low, but at least test the low again and then go up again. All right. But I want you to take note on the monthly chart again. So you see, take a look at the pattern over here. All right. Okay. So today there is a very this month almost to the end already, right? January, right? Is a bearish month, right? Let's assume 28. Yeah. So actually 31st is Monday, but we are very near to February already. Okay, so if the next candle appear, right, how do you think the candle will form? All right, so the candle will be most of the time the candle will be like that, right? Like this, right? Something like that, okay. I maybe exaggerate, the candles be a lot bigger, but you get the idea. But okay, there could be a shadow over here. Okay, the shadow over here, something like this. Okay, like that, right? You guys can see what I'm trying to do, which means this one over here, all right, this one over here, this part over here is actually the pullback, the retracement. So price come down and then maybe price go back higher again and then come back and another leg down. So you take a look at over here, all right, the COVID sell off in 2020 over here. Can you see this bar was the very first big bar correction, right? Okay, and then there is this shadow over here, which means that at the point in time there was a correction or pullback, go higher up and then come back down again. Okay, so I will mark this with a circle here. Oops, I mark this with a circle here. So later we see again. So I remove this again. Okay. Yeah, my pardon, sorry about my trend line because it's all that. Just follow me again. Okay, so in 2018, this December, all right, this was the correction, right? All right, and then this is the pullback, right? Okay, can you see that there is a shadow over here, Can see, right? Can see a shadow, right? So this is actually also the pullback, all right, before another leg down. So let's try to draw this again somewhere around here. Okay, so this bar also over here, all right, this is the first bar that came down, and then the correction here, there is also a shadow over here. So let's draw the brush over here. Let's try to draw this over here. Can? All right, so you guys get the ideas, right? Okay. Oh, by the way, I'm not asking you to short it. I'm just trying to tell you what could happen. So at least you need to prepare yourself what could happen. All right. So okay, so let's zoom. Try to draw this one more time over here. Okay. All right, so let's zoom to the daily time frame over here. Cannot see it. Okay, I must show the line over here. All right, so can you see over here? I add in my indicators. Can see or not? Okay. Elder impulse, remove the elder impulse. Okay. Right, so this was the circle part that I drawn, right? The pullback, right? So can you see over here? Price came down and then there was a retracement, a pullback before price came back down another leg. Can get it now. So this is a classic example. Price pull back to the central pivot range and then come back down. All right, and then another example over here is somewhere around here. Can you see over here? This bar over here, right? So price also did the same thing. All right, price doesn't move down in just one straight line over here like that. It could lah, but can you see along the way there will be pullback up again. When you think it is actually end of the correction, price came back down again, okay, and then come down again. So there's a lot of things that could happen. So that there will always be retracement over here, okay, and over here is here over here. This is in 2018 start of the year. All right, can you see price actually do a very sharp sell off? Okay, retracement over here. This is a very sharp retracement also, and then come back down again, that kind. All right, so I'm just telling you that the correction, okay, could pan out like this. All right. Okay, so right now the correction could pan out like this. So like that, and then goes up a little bit, come back down. That's the one scenario. Another scenario is that price just do a V-shaped recovery, which personally I don't think so. Okay, because there's a lot of overhead resistance up there, so it might need some time for it to clear past the thing. Or okay, price could do something like this. Okay, come down, ping pong, ping pong, ping pong, ping pong, ping pong, ping pong for a while, and then go back up like that. Okay, test your patience. Or it could do something like this. Come down. All right, retrace up a little bit, and then come back down another bit. Okay, like that. There's another leg down. Or it could do, come down like that, go up a little bit, come back again, retest the low over here, somewhere a little bit low, retest, right? Okay, to pay people to go short, and then price reverse back up again. Okay, so these are the few scenario you need to prepare yourself. Okay, so if you get everything I'm trying to say, right, just type okay in the comments. Type okay in the comments, right? So this is my S&P chart. I have a lot of trend lines. So maybe I go to the Nasdaq. Okay, right? If everything is okay, you understand what I'm trying to say, type okay in the comments. Oh, by the way, right, for my shorts, okay, I actually shorted 2 times. One at the start, somewhere around here, and then I took profit on this day over here. So right now, I have already exited my shorts on the QQQ already. So yeah, so exited half over here, okay, and then the other one exited fully. Okay, so yeah, right now I'm no longer in shorts because I thought on this bar on this day over here, price is actually reversing, but I didn't expect that price actually go back down again. So it doesn't matter, but I think I'm quite happy with it. And actually, I think yesterday also, or the day before, I actually tried to go long over here, a very small position, okay, but market is very volatile. I got stop out. So you can see I don't always get it wrong, but the correct one, like the Nasdaq short, is more than enough to cover my loss on the long over here. So I just want to tell you that, again, I try to be transparent. I take my trade, I do get losses as well. I don't always win all my trade, but the market is actually volatile. So if you don't know what you're doing, all right, if you don't know how to manage your risk, you can just stay out, okay? No need to trade the market right now, all right? You can just stay outside first. And if I just want to add in the yearly pivot over here, let me remove the line over here, okay? Yearly pivot, which I shared in my YouTube video, right? This was the yearly pivot over here. All right, this is the S&P. You know, can you see over here, yearly pivot? Price actually came back and hit the lower range of the yearly pivot and then start to rebound up a little bit. Okay, start to holding support there. All right, and for the Nasdaq, all right, it is below the central pivot range, the yearly central pivot range, but trying to go above lah, okay, but it's still holding at the just below the lower range over there. All right, and for the Dow, right, and it is also holding at the yearly pivot range over here. Okay, and my personal view right now, the market is actually very oversold. There could be a rebound. Okay, that could be a rebound, right? Something like that. Okay, again, I could be wrong. Please don't copy me or don't say, hey, Alex, you rebound, that kind of. So I don't know. I really don't know. But I might want to take another long trade. Okay, long trade for a short swing trade. So swing trade holding for a few days to at most 1 to 2 weeks, that kind. So of course I have to see how the price action pans out lah. So I'm looking to go long again. I'm going to go long the SPY, S&P 500 ETF. Okay, because SPY is actually the stronger among the Dow, and SPY is stronger than the Nasdaq. Previously, I shorted the Nasdaq because the Nasdaq is the weaker one. Okay, so right now I'm going to go long because S&P is the stronger compared to the Nasdaq. So I might want to go long on the SPY. All right. And the reason why I want to go long at this moment in time, just my personal sharing, I'm not asking you to go long. I could be wrong. Price could just go down like that. Okay, we never know. So please don't copy me. You need to know what you're doing, okay? Because I don't tell you when do I enter, where's my exit, where's my trigger. Okay, I just tell you that, you know, there could be a short reversal up there, okay, a pullback up. So you need to know what you're doing. Okay, so the reason why I think that it is oversold is because of these breadth indicators lah. Okay, I basically, for those who are new, breadth tells you the overall market, is it weak or is it strong? The overall market weakness or strength now. But if you have been following me, okay, the most common one that, you know, I think I use and a lot of people use is the percentage of stocks above the moving averages. I tend to share this index indicator over here. All right, let me try to zoom in over here. All right, so you can use S&P 500 percentage of stock above the 50 days moving average. All right, so you can go to set 2 years, you can overview and you chart. All right, can use the data is a bit lag, I think, for a few days, but overall still can use. Okay, but you can see that it is somewhere near, I think price came down a little bit more, so somewhere around near the bottom, not the absolute low. Could go lower, which means that the price could still go down a little bit lower, but we are somewhere near the low. Okay, so I previously used the index indicator. All right, I give you another few website that you can find this percentage of stocks above the respective moving averages. All right, you can go to this link over here. Right, I post a link in the comments already. So let's go to here. All right. Then you can see, right, these are the link over here. Right, percentage Nasdaq, percentage of stocks above 150 days moving average, S&P, percentage of stock above 50 days moving average. All right, and a lot of above S&P 100, above 50 days moving average and such, right? Okay, so the S&P percentage of stocks above 50 days moving average at SPXA50R. SPXA50R, right? SPXA50R. All right, so this is the percentage of stock above the 50 days moving average. Okay, so by default, it is only 1 year. You can go to maybe say, maybe let's say 5 years. All right, just scan, not scan, just click. Okay, we are somewhere around the low already over here. Here's your, right? Right, so somewhere around the low. Of course, minus the 2019 and the COVID itself. These are the extreme level. But talking about usual low, we are somewhere near the bottom already. All right. And these are a few. So you can go to stock chart. So you can go to stock chart and see all the different kind of percentage of moving average above their respective MA. All right, Nasdaq, S&P 500. I post the link once again in the comments. So you take a look on that. Okay. Alternatively, all right, you can also go to Trading View. Okay, and you can all right, go to this ticker over here. Okay, S5FI. S5SFI, sorry, S5FI. All right, S5FI. So this is the S&P 500 stocks above the 50-day moving average. All right, this data, it is from barchart.com. All right, so you can change to line over here, and you can zoom out to the weekly time frame if you don't need to be too messy, too many things. You can see that we are somewhere also near the low already. So that's the reason why I say that we could be at the near-term bottom over here. So this is one of the breadth indicators that you can use. All right, so you can go to index indicator, which is over here. All right, or you can go to stock chart. Okay, the link I already shared in the comments. The whole list of breadth. You can take a look. Above 50, above 150, above 200, that kind. All right, go ahead and take a look, or you can go to the you can go to this where is it? Sorry, S5FI, percentage of stocks, S&P 500 stocks. Okay, Darius is asking, right, is the MMFI better than the S5FI? Okay, at least I know the S5F very challenging. S5FI, it is S&P 500. For MMFI, right, although the data it is also from bar chart, MMFI, I don't know what is the component. They only say percentage of stocks above 50 days moving average. So I don't know what is the component. Is it the whole board across all the stocks, or is it certain, is it Dow, S&P, or don't know. So personally, I like to use the S5FI. So at least I know that it's comparing against the S&P 500 stocks. So this is my personal view, but I think it is about there. So you can see MMFI, we are also near the bottom. We are also near the bottom also. But about that, I'm going to be absolute accurate, but we are about there. That's my opinion. But again, we are about that doesn't mean that it is at a low. Price can still, as in it can still go lower and hit rock bottom. All right. Enough of the percentage of stock above the average. Another one that I want to share with you guys is actually this. All right, the 52 weeks high low. Another breadth indicators. Yeah, I think I never shared before, but sometimes I do take a look as well. All right. And you're comparing the 1 year high low, okay, high low, 52 weeks high low. Let me try to zoom in over here. All right, there are many. Okay, so I don't know if you guys can see over here, right? So you can compare, like, for example, Nasdaq 50, Nasdaq new high minus new low over here, new high minus new low over here. Oops, new high minus new low. Okay, or you can see the ratio, new high new low ratio, okay, or the S&P, not S&P, the Nasdaq new high low ratio. So I like to look at the NYHLR. Let me post a link in the comments. So just to let you know that there are different breadth indicators that you can actually explore and use it. Okay? There are quite a number of breadth indicators. Okay, so you can take a look. So I normally like to look at the new high low ratio. All right, so it's NYHLR, NYHLR, NYHLR. New high, new low ratio. Okay, so again, it's a line chart over here. By default, it's 1 year. You could set to maybe 5 years, up to you lah. Okay, 3 years, 5 years, up to you. Okay, you can see over here, we are also somewhere near the extreme level already. Okay, we are previously only the COVID exceeded that level over this level over here. Okay, this was the COVID 2018 end of the year. Other than that, this is the low, this is the low, this is the low. Previously, it was something like that, somewhere around here. So we are also near the low already. So you see new high, new low ratio. So of course there's a lot of lows, right? The number is very big. Of course, the ratio is going to be low, right? And the ratio is going to be very, very low. Okay, that's why it is at the low right now. Okay, so again, that's a personal opinion. Looking at a few breadth indicators, yeah, you can roughly know that the market might be up for a rebound. Again, I need to repeat, doesn't mean that it is the low. The price could do a rebound over here. Price could do a rebound. Price could do a rebound over here. Let me go through that. All right. Price could do a rebound. Okay. A rebound off the low and then come back down again. Okay. So the breadth indicators, getting various sources, where to get the breadth, the data, right? Stock chart. Are this something new to you? If this is something new to you, type new in the comments. Type new in the comments so that I know. Okay. And the reason, while you type your answer in the comments, right? The new, right? If this is something new to you, just type new in the comments. Okay. And the reason why personally, why I don't think, right, it is a market crash yet, at least yet, not market crash yet. It is because, okay, right now, the narrative is that there's a rate hike inflation or valuation, or the growth stock, etc. There's too high valuation, all this all these are known. People already know already. So rate hike, the Federal Reserve have been prepping the market for the past how many months already? One year or so. Every time the meeting will tell you that we are going to increase the interest rate soon, we are going to increase the interest rate soon, we are going to increase the interest rate. Tapering, are we going to taper soon? We're going to taper soon, we're going to taper soon already. So has been always prepping the market already. So I think this has been priced in already. And inflation, this is also not something new. Along the way, price has been creeping up steadily. I think the market also know, okay? So it is a known, okay, or it is a known unknown, which means that people know there's inflation, but they don't know how high it can go. So all these can be anticipated one, right? You know there's inflation, you just don't know how high it will go. Okay, I know there'll be inflation next year, but I don't know whether it's 5%, 10%, 20%, that kind. So it is a known unknown. Okay, so let me take this let me take this chart to let you guys see over here. You guys can see this chart, right? So inflation, all right, rate hike, known. So this is like the interest rate. Okay, the interest rate increase. We know things we are certain of. They already prep us already. Okay. Known, unknown, right? We know there are things we can't predict. So let's say there's another COVID variant, okay? okay, this Delta, this Omicron, it is not going to cause a market crash already, because we already know the market can anticipate. Okay, even there's a new variant that's coming out. I don't know, IHU or whatever. There's new Omicron or whatever variant now. Okay, we don't know what is the variant, but we can predict, we can anticipate there is a new variant. So this is a known unknown. All right. So I don't think you'll cause a market crash. Okay. And there's this thing called the unknown known. All right. Other people know, but you don't know. Okay. Maybe they're insiders. They know that, what the market is doing, or the insiders or the hedge fund, they're all selling very aggressively. Okay. You don't know, but the insiders know. The insider knows, I mean, that there are people who already knows it already. Okay. So most likely, it will not cause a market crash. Okay. So at this moment in time, okay, the only thing that I fear, okay, is that might cause a market crash. It is unknown, what we call a black black swan event. Okay, black swan event. So which is something that we totally cannot predict at all, which is the COVID sell off, the COVID in 2020. Okay, it just bang come, like we didn't expected it. We didn't know there will be a pandemic coming. So it's totally unknown. So this is a thing that totally cannot be predicted one. So yeah, so we right now I think that the only thing that will cause a market crash will be a unknown. So it could be, I don't know, a war, right? Somehow, I don't know, North Korea fire you a missile to US, causing a war. China start war with US. That kind of thing. I said nobody can predict one. Suddenly one. So it is suddenly one. So you guys get what I'm trying to say now. If you guys understand what I'm trying to say about this known, unknown, known, right? Just type K in the comment. Known, K, known, type K in the comments. All right. So bearing any unforeseen circumstances, okay, I think whatever right now, status quo, everything we know about the market, inflation, interest rate, tapering, all this will not cause a market crash right now. So we really need something, a catalyst, something that we really don't know, a black swan. Okay, by the way, I sometimes you always see that, could this event be a black swan event? Could that event be a black swan event? This is a bit oxymoron, because a black swan event cannot be predicted one. So if you can anticipate what is it going to be, then it is no longer a black swan event. So could China invade USA and cause a black swan event? If you can anticipate, this is not a black swan event already. Can? All right. So how about the Russia-Ukraine right now? So the Russia-Ukraine right now, it is already known. It is already known already. So it is very far away, okay? The US, that is in a world by itself one. Okay. Do you realize that when the COVID first started, right? It started in Wuhan, China, right? So at that point in time, in January, or December, January, the US still doesn't react to the market, as in the market doesn't react to the news. So Wuhan, or it's in China, doesn't matter to me, that kind, right? It is until like shit hit the fans, until like the market, the COVID actually reaches the AMOR country, the European countries, the US, right? Then they start to realize this is getting big, right? And then it started to sell off, right? So I think for the Russia and Ukraine, like not really. The market knows already. So right now, not much reaction until maybe it kind of US has some relationship with it, have some issue with it, then it could lah. But right now, I don't think so. Okay, it's just my personal opinion. Okay, so if you know about this known, unknown things, so that's my personal view. I don't think it will cause a market crash right now. All right. And yeah, and these are fear and greed index, okay, from the CNN one, fear and greed, okay. Also pretty interesting to me. All right, I think I mentioned before. I post a link in the comments. Oops, so the wrong one. Post a link in the comments. Okay, so I think before the market start, it was still at about 33. Of course, this fear and greed index, right? It is based on several factors like the the pool and call options, the jump bonds, stock price breadth, the market breadth, lah. Okay, volatility from the VIX, safe haven demand, market momentum, etc. So based on all these few factors, they try to give you a gauge, lah. So right now, market is at a fear level there, but it is not at extreme fear lah. Okay, so which means that interestingly, so there might be room to fall further. That is just my personal opinion, and again, this is also in line with what I share just now, like the market over here. Okay, so like if you zoom into the money chart, so price, the market might need another 2 to 3 months, okay, another 1 or 2 months to really correct, then you call a bottom. So maybe at that point in time when the second or third month happens, when the market fall further, then maybe I think that might cause more fear, and then that's where we bottom. Right now, at this moment in time, I still feel that the market looks okay to me. I think I don't see a lot of fear in the market. I think people are still generally okay. Do you feel so or not? Are you feeling okay? If you are feeling okay, type yes. You are feeling nervous, whatever, just type no, worried, scared, etc. But my general sensing is that the market, it is still pretty calm. The market come down, come down, come down, come down. Doesn't matter, that kind of. Do you have this kind of feeling or not? All right. So at this moment in time, while the market is actually rebounding, the market is actually rebounding right now. Okay. So let's S&P 500 over here. Okay, let me take a look at the 2-day time frame. I removed the elder impulse over here. 2-day time frame, which is something I look at as well over here. Again, price is below the cloud. Okay. Short-term wise, based on the daily time frame, we are in a downtrend. Okay, but as I mentioned, I think the market, it is over. So already there could be a bounce. How high it will bounce, I don't know. So let's say, for example, this is the low 437.95. Wait, 437.95. All right. So actually, if the market can go above 437.95, 437.95, okay, this is actually wash and rinse trigger lah. Okay. If market can go stay above 437.95, stay above there, then I will be more bullish, and I might go for a short-term long position. Okay, until price goes up like this, I will see how it goes, see how price reacted, and then I might go short again. So this is purely from a short-term perspective. Okay, if you are doing a longer-term position trade, then you can just stay one side first. Doesn't matter. Okay, but I tend to like to do swing trade. I enjoy doing that. So yeah, I will see how it goes first. Can? Right, so 437.95 is if the market within the next week can stay above 437.95, then I will be more bullish short term within the next few days to 1 week or so. Okay, can? All right. So what else to discuss over here? How many of you actually invested in any of these growth stocks? ARKK one, ARKK stocks. ARKK. You type yes to me. Type yes in the comment if you actually invested, and it is quite I don't know how to describe, painful, worried, that kind of market drop a lot, and yeah, and you don't know what to do, that kind. Okay. So yeah, so I understand your concern. So to me, I think it could still drop further because the market is actually actually rotating back to the value stocks, and because of the higher interest rate high, there's a valuation reset on all these growth stocks because of the interest rate hike. The future money is worth much lesser than the money that's worth right now. So because of these growth stocks, they are calculated, they are valued based on their future value, correct or not? So it is not doing very well on this all these growth tech stocks lah. So ETF over here, fund details are holdings over here. All right, let's take a look. So Tesla and all this, right? Tesla, Zoom, Teladoc, Roku, Coinbase, all these are dropping like shit. Unity, okay, Spotify, UPath, okay, all these are dropping like shit. Okay, like for example, let me try to remove some of the thing first. I was causing my browser to lag a bit. Okay. Oops, I think remove that. KK5. We are past the 1 hour mark already. Okay, so do you want me to share with you, how I actually input the data into my screener just for sharing now? Okay, so to share with you how I actually see the data and such. If everything's okay, if you want, just type yes, and maybe I will share until maybe one. That's it. Okay, so how do you find the worst performance, best performance in the ARKK ETF? By the way, do you know which is the worst performer in the ARKK ETF or not? Or which one is the best performance in the components? So I think there are about 42 or 43 stocks in the ARKK ETF, right? Do you know or not? Do you know which one the best, which is the worst performer one or not? Okay, so let's do it together. Okay, let's do it together. Okay, let's do it together. So you can download the holdings over here. Okay, inserting comments. All right, so you can download this. Okay, download already. Then I go to this market in out over here. Wait. Okay, so total there are about 43 stocks. 43 stocks. Okay, so what I'm going to do is just copy all the ticker. Okay, for me now. Okay, ticker over here, copy. All right, I go to my market in-out screen. By the way, this is my own screener. This is a paid screener. Just share with you what I do. Okay, so let's say watch list. I already created one now. Okay, the ARKK one. Yeah, just delete. Okay, and do again. Okay, delete, check. All right. So let's create a new watch list over here. Name it again ARKK. Okay. Stock. I paste in everything. Okay. Right, so there are about 42 stocks. Okay. I don't know whether the last one got left out or what. Maybe what. Let me see the ARKK. Okay. Okay, because of the government cash, that one. So it is not the correct one. So there's only 42 stock in the ARKK ETF over here. Make a guess which one is the worst performance for the past for the past 1 year? For the past 1 year. Okay, let's do it for the past 52 weeks. Which is the worst performer and which is the best performance in the ARKK? Key in your comments right now before I share with you the answer. So we have 42 stocks in the ARKK one. Any answer or not? Let me try to zoom in over here. do engage with me, so make it more lively. Right now, we have about 280 people in the room, about 300. There'll be more answers, right? Just make a guess. Okay, all the stocks over here, Tesla lah, whatever, Shopify lah, Path lah, Palantir, Twilio, Zoom, PD, Pager, Duty, Roku, RDM, all this. Which one is the worst? Or the best? Okay, I'm going to share with you the answer already. So let me go to price performance. 52 weeks, 52 weeks, for the past 1 year, which one is the, let's go for the best one. Let's go for the best one. 52 weeks. Only 2 are green, 52 weeks, NTLA is actually the best performance. NTLA, Intella Therapeutic. Okay, to be honest, I never really follow these stocks. Tesla, surprisingly, is actually number 2 at 6.63%. Okay, number 3, Trimble. Well, let's take a look. NTLA over here. NTLA for the past 52 weeks. It is actually the best, but it is also starting to come down already. So this was the best for the past 52 weeks. And Trimble, TRMB, is also coming down. TRMB. Yes, Patricia, Zoom actually fell way past below more than 52 weeks ago. But I'm just using for simplicity's sake because this is what the platform can do. All right, so Trimble also coming down already. Okay, so the worst one, let's take a look. 52 weeks low for the past 1 year. Okay, can you guys see or not? Number 1, Berkeley Lights. Number 2, Skills. Number 3, Invite. Number 4, T-Docs, Telidoc. Okay, so let's look at BLI, Berkeley Lights. You can see the chart. You can see the chart. See, totally crushed from a high of 112 to the low of about just what price is it now? $8.60 only. Okay, so not more than 90% already. Yeah, but this is currently trapped until 52 weeks lah. Okay, only trapped on 52 weeks. So Telidoc is the same. So Palantir, right, dropped 63%. So can you see that a lot of things are dropped more than 50%, 88%, even like Twilio, the first page over here also dropped 47%, 50% already. All right. And if you take a look at the financial ratio over here, okay, I want to take a look at the price to sales ratio over here. So basically, this is price to sales ratio. Sales basically is the revenue because a lot of these stocks, they do not earn money, so they do not have profits. So you cannot use P ratio, you cannot use earning growth, you cannot use PEG as well. So you have to use a price to sales ratio, and quite a number of these, for ARKK one, it's crazy, like Beam Therapeutic, price to sales ratio, it is at 5,798, 5,000, 6,000, comparing the price to the amount of revenue that it's getting, TSP, NTLA, DNA, all this, crazy. At least Shopify, the price to sales ratio, it is at about 22. I think still okay lah, price to sales ratio. So some of these are the best one. It is like Signify Health, Spotify, which is quite, because Spotify is actually making money already. Okay, so actually price to sales is quite okay also. Price to sales 3.24 something only. If I am not mistaken, S&P price to sales ratio, right, is at, right now it is at about 1. is it 2 point something, 2.89, 2.89. All right, so about 3 price to sales ratio, because all these companies are making money, most of them, okay? And the max is 3.15. So a lot of these company, right, you need to compare against their industry and such. So just to give you a comparison, like this kind of stocks over here, cannot buy one, no Beam, TSP, NTLA, DNA, Fate, Adidas, Medicine, Unity, right? 27, I think still a bit high on the high side. So all these, I think, still potential to come down. Unity software. Let's take a look. Unity, sorry. Is it U? Yeah, Unity. All right. It is just coming down all the way also. So I think there's still, I think it is still overvalued, okay, based on the price to sales ratio and such. So as such, I think the ARKK, there might be more room to come down also. So it's been coming down, and I just take a log scale over here, naked chart. Okay, because if you zoom in on like that, it's like very hard for me to draw trend line over right now. So I use a log, so it looks more normal. And all right, so I think, okay, we are maybe somewhere near the low already also, but it might take another drop. It could potentially, just my personal view for ARKK, oops, from here to the low, maybe another 12% or so, we could be hitting a potential support, that kind of, okay. Again, some of these stocks, right, for example, like Tesla, Zoom, T-Dog, Roku, Coin, the bigger percentage one, if you are a long-term investor, you are very convinced, you have strong conviction that all these are the future growth stocks that is bound to grow leaps and bounds and that's going to change the world, that kind. All right, Tesla and all this, you can actually dollar cost averaging now. Okay, every month, because you have income, you can just buy a bit, that kind of. All right. So as price come down, you buy more. As price come down, you buy a bit more. Okay, that's for dollar cost averaging, provided you have very strong conviction. But if you are doing, trading, big swing trade, position trade meaning that you hold for maybe a few months, 3 months to 9 months, that kind, then I think don't. Okay, the best is for you to wait for it to turn into an uptrend first. Okay, so let's say, for example, Tesla over here, right? I know, there are many YouTube channel or some channel, some influencer, whatever you call it, they are extremely bullish on Tesla. Tesla is the future growth stock. Okay, it's up to you. I mean, there's no right, no wrong. That could be the right now could be the opportunity of a lifetime. I'm not sure, but for me, I won't buy right now because I'm a trader and a position trader at large. So I would want price to at least go back above, the central pivot range. Then I might consider, going long again. Okay, like T-Dog, Tele-Dog, all these are just going down the way. I don't want to catch a bottom. So at least wait for price to go above the CPR, or best is above the cloud, then I go long again. So no need to, don't have to be as in, no need to fear of missing out. There'll always be chance one, so don't fear of missing out. Wait for the opportunity. Can? All right. So again, this is just my personal view, right? If you are really long-term investor, then by all means you can do dollar cost averaging and such. But if you really are a trader, swing trade, position trader, all these growth stock, don't go in. Don't try and catch a low. Can? All right, can. So right now we are at about 1 hour and 20 minutes. Okay. Do you have any question for me right before I end it a day. I call it a day. Maybe I can stay until 1 a.m. the latest. Okay, so any question for me? Let me take a look at the comments. Charlene, I don't do this. I mentioned I don't do this because I am not a long-term investor. So I mainly trade swing trade. Okay, swing trade the market and do position trade. Position trade, I need to wait for a while also. Like position trade, I'm waiting for the Chinese stocks to turn around also, but it is still not turning. All right, I'm waiting for Alibaba. It is still not turning. Okay, yeah. Chris, where do you usually place my top? Bearing normal condition before this correction, normally I place my stop 1.25 ATR from my entry price. So it is a pretty tight stop. Yeah, this is just I set lah, okay? I set my stop. So let's say, for example, SPY over here. For example, of course, right now the market is a bit volatile lah. So 1.25 might be a bit too tight, but you set the ATR over here, ATR, average true range. So the S&P ATR right now, it is 9.07. Okay, so assume the 9.07 times 1.25. Okay, so my stop will be 11.33. So 1.25 ATR. Just assume that's 1.25 lah, okay? You can put 1.5, 2 ATR, doesn't matter. So for me, 1.25, like it is. So right now the price, it is actually, let's assume that you enter right now, okay? The market price right now is 435.4, okay? 435.4 minus the ATR, 424.06. Where's 424.06? 424.06 is somewhere around here. Okay, so 424.06. 424.06. It is somewhere around here, at the low over here. All right. Can? So I hope that answer your question. So if you enter here, my stop is 1.25 the ATR. Can? All right. Is this a bear market? As I mentioned already, right now, if you take a look at the S&P 500 futures, not bear market yet. Okay, if you look at the weekly chart, okay, it is still an uptrend. What? You see, price above the cloud based on the weekly time frame. All right, based on weekly time frame, it is ever since price broke above the cloud after the COVID crash, right? Price has been staying above the weekly time frame, and right now I think this is still a correction territory to me, right? Nothing to fear right now at this moment in time lah. Okay, I still deem it as a correction, and the correction might take 2 to 3 months. So right now, from January right now, maybe another 2 months, March, that kind, it could. Okay, yeah. All right. C also cannot see. Can you see that the weekly time frame? This is actually broke below the cloud weekly time frame, so it's on a downtrend already. All right, on a day time frame, definitely it is on a downtrend, very clear cut lah. How low it can go, I don't know. Seriously, I don't know. So yeah, I won't catch the downtrend. All right. But if I'm not mistaken, all right, for C, because C is a loss-making company, Shopee, they are not making money. All right, so if you go to the stock code over here, C over here, right? Can you see that the price to sales ratio 9? Cannot see, right? 9 over here. Price to sales ratio is actually 9. Not crazily expensive. Okay, I think still got room to go down further. Maybe I don't know, 3 to 4, 5, that kind of numbers. Still can go down lower. Because if you take a look, like for example, like Amazon, who's making money one, for example, Amazon, okay? The price to sales ratio, you can see the price to sales ratio for Amazon is 3 times only, all right? C is still 9 times, and it's not making money. Some more, I just personally feel like next still got room to come down further. All right, Ken? And by the way, I'm not a fundamental guy. So if anything you don't agree with me, you think I'm wrong, I think that's fine as well. Because I don't claim to be an expert on all these fundamentals things. Okay, I'm more of a technical trader. All right, Ken. And let me see a question. How do you short? How do I short? What do you mean by how do I short? Just use a broker and short. All right, so just sell first also. That previously I was looking at the QQQ. Okay, as I mentioned, I'm looking at certain indicators like the VIX, okay, BVIX and such. All right, and I think there's something is not very right. I just took a bet and short the QQQ. First short over here. I sell first short. I use interactive brokers and short. I also have TD and Metrade. I also have TMC markets of the IG. So whatever broker there is, you can short it. Okay. So short, when price rebounded that time, I actually covered a bit, then retested again, I short again. Okay. And then I think 2 days ago I covered my position. So right now I do not have any short position. I'm more inclined towards to do a quick trade on the long side, okay, and see how it goes. All right. So for May, if depending on your time frame, okay, are you doing swing trade or are you doing position trade? If you are doing position trade, I will suggest that you just do nothing first. Okay, just stay at the sideline first. All right. Okay. Right now, I think it is not the right time to short because I always say you want to short at a high, right? You want to short here you want to short here you don't short here already. Right now the market is really oversold already. So you short here, what I always say, okay, always something is wrong. You want to short, you short. Of course, can the price go down even lower? Of course it can, but the risk to reward, it is not there anymore already. So yeah, so I would prefer to go long short term long. Can may I know what position are you holding right now? Actually, I'm in cash. I'm in cash. Yeah. So all my position holding, I exited already. Previously I do have some position on the oil as well, but I also exited. So mostly all in cash right now. So I'm quite carefree. I'm not scared of the market right now because I don't really do long-term hold. I don't do value investing. I don't hold for many years that kind. Mostly position and swing trade. Yeah. So right now, I was mostly swing trade. So holding cash right now, and the most recent trade, I shorted the QQQ, SPY, all this. I already exited already. Okay. How frequent do I adjust my stops? So if price is above, let's say for example, let's say I put my stop 1.25 ATR, let's assume is $100. So price, I am in profit $100, right? So I'm not in profit $100. I will shift my stop to the break-even price. So as price move higher, I will throw my stops on. So how I throw my stop is another session. I mentioned before, you can throw your stop according to the price action or according to the EMA, which I'm doing also. So there are many ways to do that. But essentially, once price move in my favor, I will shift my stop to my entry price. Okay. Right now 1.25 ATR, yes, but you also need to realize that right now the volatility increase, the ATR also actually increase also. So I think it is still okay. So yeah, of course you want to put 1.5, 2, it is up to you. So right now I might put my stop to 1.5 ATR. Okay, it is just a guideline. So you have to see the market condition also. All right. Which sectors will you consider to be strong? Of course, the strongest there is which sector will you consider to be strong? Right now, the strongest is still actually energy stocks. Okay, but right now I won't be looking too long now because previously I took some profit exited already. If I long now, I think also Tanao Pai. I'm buying at a high now. So there is, so you can take a look at the sleepcharts.com. So what are the strong sectors? All right, you take a look at the S&P 500. All right, you take the component performance. See this one? Yes. All right. So okay, at this moment in time, year to date returns. Can you see that all the top stocks or not? Halliburton, Schlumberger, OPC, ConocoPhillips, EOG, ExxonMobil, APA, Hess, Marathon Oil. All these are strong stocks. Diamond Black, Activision, 不要讲了 because of the Microsoft acquisition. Okay, all these are energy stocks. So, Las Vegas Sand also. So, if I really want to go in, I will look at the consumer discretionary industrial also, which I think, okay, are the up and coming one. All right, if the market really do turn. Of course, the energy stocks can still continue to go higher, but I think the risk to reward, it is not in my favor already. Okay. All right. So, what is your swing trade risk to reward ratio? Risk to reward. Sometimes I can get 1.5, right? I'll be happy. I will exit and I will trail that kind. All right. So as long as above 1, I'm happy lah. So sometimes, people say, risk to reward at 2, 1:2, 1:3, that kind. Actually, it is quite hard to get if you're just looking for a swing trade. 1.25, 1.52 still okay lah. Anything above 1.2, unless the market is really in your favor, then I think it is a bit hard lah. So anything above 1, I'll be happy. Then I will shift my stop and I'll just trail and trail and trail. So I think that is quite okay. Can? Right. Energy sector, no. As I mentioned already, Chiwei, right now, it is really overbought. Of course, again, the market can go higher for the energy stocks, but I won't chase that. Can? Right. Any view on the consumer staple? Okay, let me try to do on STI first. STI, let's look at STI. What? 1 a.m. already. I'll do a few more questions and I call you a day, okay? Something next. If you realize, based on technical perspective, STI is actually on an uptrend above the CPR, above the cloud. Based on the 2-day time frame, still pretty okay. Actually, price cleared the recent resistance over here, and then price do a pullback. So if price can head back higher above the resistance over here, right, then I will be bullish. Okay, right, must clear above the high over here. Then I'll be back to bullish mode again. So STI good because if you realize that the Asian market is doing pretty well, except Hong Kong now. Okay, like Singapore is doing pretty well. Okay, and a lot of other emerging markets, but it seems like the money is flowing out of the US right now, which is lah. Okay, yeah. Consumer staple, it is XLP. All right, Fabian. In this supposedly inflationary future, technically yes, but for me, I will still look at the price action. In theory, the utilities, the XL, all these consumer staples should do well because whether the price increase or not, we still need to buy our food, our daily necessities, etc. So which is you can see that it is still holding pretty well for the consumer staple. All right. Yeah. So for me, quite a good choice actually. Hitting at the central pivot range, right? Yeah. Which I think could be a potential trade as well. All right. But I would still prefer to enter the index lah. Okay. Wow, a lot of questions. Sell then buy TD, how to execute that? I don't think I'm in a position to share with you that. I mean, then you need to walk through the tutorial, how to sell, how to short. Basically, if you can just sell it first. But again, I'm not advocating you to short. Okay, if you don't know if you don't know what you're doing, please don't short. Okay, just don't short, don't sell. Okay, just stay one side. All right. Okay. Crypto, I think not today because no time already, Joshua. How to resist buying when trend is unclear? You give me my money lah, MH. Then you no money to buy lah. Just how to resist buying? Just stay one side first. If you're unclear, it is okay to stay one side lah. No, don't have to just keep buying lah. Doesn't matter lah. I mean that if you're unclear, stay one side. Don't touch anything first. Wait for the trend to turn to uptrend again. Then you just go buy lah. Can? All right. Technical use mainly to determine entry trigger. So, okay, to determine the trend MH, right, I use all these cloud to touch the trend, all right? The strategy is actually, I'm doing a pullback strategy, right? Technicals wise, what's my entry trigger? There are a few like watch and rinse trigger and such, which I won't share now. Okay, so the strategy is mainly pullback. I'm more of a pullback trader. Okay, to determine the trend, I use cloud, central pivot range, pivot points, etc. All right, market in out. Look at 1 month or 3 month change better. To me, doesn't matter lah. You can look at different time frame, 1 month, 3 month, to look at different perspective. For 1 month, I will normally see what is the the strong sectors right now. 1 month, 3 month to see the strong sectors and industry. Okay, all right. I think already 1 already, so I don't want to talk more than go later than 1 p.m. 1 a.m. So I hope you guys are enjoying my sharing today. If you enjoy my sharing, if you learn something new today, right? Just type new in the comment or type value in the comments. So to give me some encouragement, all right, before we call it a day. So let me drink my water first. And at the same time, I wish you guys a very happy New Year, 新年快乐, okay? 心想事成 and 身体健康. I think 身体健康 is very important because you need to have a good health, then you can make money, right? If you have no health, you make how much money also no use to me and to you lah. That's my opinion lah. All right. So very important, 身体健康 is the most important thing. Okay, so thank you so much for all the comments. All right, thank you so much. Okay, so let me take a look. All right, so I think that's all for today lah. Okay, so I hope you guys have a good session today and have a good new year, and we shall see how the market goes. But just to recap, I think the market right now oversold. There could be a bounce. Okay, but midterm, within the next 1 to 3 months, my view still unchanged. I still think that there could be more room to go, but we will see how it goes because the market is dynamic. The next 1 or 2 weeks, when the price action changes, my views could change again. So we shall see. Okay. So meanwhile, Happy New Year, 新年快乐，身体健康, and I will see you guys again very soon. Okay. Bye bye. Good night. Enjoy your weekend. Bye bye.